A CBS News poll that was released today found that 69% of Americans don't believe that Trump is doing enough to lower prices. So, what is the status of inflation? Let's look through some data. Here we see the 10-year break-even rate. This is a inflation rate that is derived by the market. It's a swap that is traded by market participants. It is not a bond. Bond yield includes other components that go into the calculation for what the yield should be. The 10-year break even, this is purely inflation. And what we can see is that since inauguration, the 10-year break even rate is down by 11 basis points. And it's also important to point out, with all the talk about tariffs being so inflationary, the 10-year break even rate has never traded back up to the level that it was pre-tariff announcement. So in this entire time, the 10-year break even has been trading lower than what the rate was when the tariffs were announced, which was looks like 2.33, and it is currently 2.27. So the market is certainly not worried about the tariffs or any inflationary impact of them, because this instrument is down 6 basis points and has been down ever since the tariffs were announced. Here's the 10-year yield. This includes other components to it. The 10-year bond yield is supposed to approximate nominal growth, because it's relatively risk-free, according to most market participants. They believe that. Because it's backed by the U.S. government, the full faith and credit of the U.S. government, this shouldn't have too much credit risk priced into it. The 10-year yield is mainly a nominal growth story. Remember, nominal growth includes inflation. So that's real growth plus inflation, and you get nominal growth. And we can see that since inauguration, the 10-year is down notably. 10-year is down by 53 basis points. That's equivalent to 2 Federal Reserve rate cuts, or one jumbo kind of emergency Federal Reserve rate cut. So it's not insignificant, the amount that this rate is down. Here we see core CPI. Core CPI year over year. This is what most people will think of when they hear inflation. They'll think of a number like 2 or 3 or 4. What that is referring to is not the actual CPI index. That's referring to the rate of change that goods and services are increasing per year. Generally, it's reported as a year-over-year number, but there is month-over-month data that we will look at shortly. This shows core CPI year-over-year change, and it is currently at 1.8. So what this indicates is that costs are, for the 12-month period, costs are still going up, but they are only going up at 1.8% per year, versus, at the peak, we know core CPI was close to 7%. So in general, this is called disinflation. In general, the rate of change for inflation has been falling. That does not mean necessarily that prices are actually coming down. And the reason for that is that the CPI index, this is what the actual CPI index looks like. And we can see that prices never go down, basically. Forever and ever, prices just only go up. This is actually what people feel. This is one of the major disconnects between economists and everyday Americans. There are dozens, hundreds, but this is one of them. One of the, I think, primary ones that's illustrated itself recently. This is how normal people feel inflation. It's a cumulative effect. It's not, normal people don't calculate, keep a spreadsheet, notating, oh, well, how much did my eggs go up versus last year? How much did my car insurance go up since last year? They're only worried about the fact that, oh my God, my car insurance bill's $350. What happened? Or, insert kind of crazy price here. And this is why. This is what the actual CPI index looks like. And you can see that in general, prices basically never go down. They only go up. It's just about the rate of change that they are going up. We can see here that in the 2008 great financial crisis, in that recession, prices actually did come down very minorly. You really can't even see it on the kind of longer term view. It's just a little blip. But during 2008, prices did actually decline. We did actually see this index decline. But in general, you don't see anything more than these kind of temporary little blips. And in general, this would be deflation. Generally, you only see deflation in a recession. So this kind of gets to the point of, so many Americans wanted Trump to lower prices, and Trump promised that he was going to lower prices. I think he said on day one. Um, what he didn't say, and I think what most everyday Americans don't know, is that generally prices only go down in a recession. So, what would have been more instructive or insightful, interesting, helpful, is if they had said, do you want prices to come down even if that means a recession? Because typically that's the only time that prices actually come down. And so, anyway, so we can see that this overall index has increased notably, and especially since 2020. You can see that it basically inflected higher. It had been on this kind of rate trend line here, and we can see that starting in 2020, the end of 2020, when all the trillions of dollars of money was printed, this inflected notably higher, and totally broke from its kind of longer term. This trend goes back all the way to 1980. This red trend line here, and we broke notably higher and have basically been going, at a much sharper angle since 2020. So what about month over month? This shows month over month CPI. And this is not core CPI. This is the headline that does not exclude any food, energy, housing, anything like that. This includes all items. And we can see that in the interesting thing about this poll is that actually the most recent data release we got showed that prices actually did start to fall. Remember, we said that in general, prices only go up, and that index only goes up, and that prices don't actually ever fall; they just increase less quickly in a period of disinflation. But we actually saw a very, very slight deflation, meaning the people are getting what they wanted, what they wished for, which was actually to have prices start to come down. Whether or not this trend continues is anyone's guess. But it is just kind of a little ironic that such a large percentage of Americans voiced that particular concern when I understand most people are not watching these data releases on a month to month, week to week, day to day basis. But ironically, the most recent data release actually showed prices actually came down. Anything below this black line, this is a month over month change. Anything below this black line here is deflation, is prices actually coming down, not continuing to increase, just not as quickly, but like actually coming down. And we can see that in March, we saw a deflation of 0.05%. So if you round that up, it's 0.1% that prices came down. Now remember, the overall index rose sharply. We were just talking about that. And so, a 0.1% change when since 2020, this index is up. Let's do it. Since November 2020, this index is up 22.7%. So, a 0.1% month over month change is most people are not going to feel that. I did think it was just a little ironic that given that the last data release was actually notably deflation, showing deflation. That was an important thing to mention. But I think that an underappreciated or under discussed dynamic is this 10-year break even, which has been falling, and has been falling even since all of the reciprocal tariffs were announced. That the kind of mainstream or non-financial media is so, kind of so obsessed with inflation or the inflationary impact of tariffs, not what I think are the more important elements of tariffs, but the inflationary impacts, when in reality, all of the kind of sophisticated and educated market participants that look at these things are actually worried about less inflation than they were before those tariffs were announced. And again, since inauguration, this 10-year break even has been moving, in a trend down that pretty much the entire time. We have seen some volatility after the tariffs were announced, but this entire time, this entire period of time since the kind of large reciprocal tariffs were announced on quote unquote Liberation Day, the 10-year break even has been trading below the level that it was at 2.33 the day before when those tariffs were announced. So the 10-year break even, this is the inflation instrument, and this is not indicating any concerns with inflation. The 10-year yield is also down. Again, if the market and the sophisticated bond investors and sophisticated educated market participants were worried about inflation, this yield would be going higher, not lower. Usually, when yields are falling, that's a consequence of lower nominal growth expectations. Now, that has other downsides to it, but in general, that indicates less inflation. And so again, the not only is the 10-year break even trading down and has been trading down, not just since Liberation Day, but also since inauguration, the 10-year yield itself has also been showing that same trend. And core CPI has been falling. You can see that it was basically range bound here. Again, the core CPI is what the Fed looks at. This is what they look at when the Fed looks at inflation data. They look at core CPI. And you can see that since from November 2023 all the way up until December of 24, it was basically kind of in a range here. It was not moving too much, very much at all. And then, but since and Trump was inaugurated in the past couple months, this has moved pretty, substantially lower, at least in terms of a move from 2.37 all the way down to 1.8. Again, that lines up with what we've seen with the 10-year yield being down about 50 basis points since inauguration, 54 basis points. So it lines up pretty much perfectly. The core CPI and the 10-year yield have both decreased by 50 basis points, by half of 1%. Now, again, remember, this in general, this index only goes up. Costs only go up. You might have these kind of momentary blips where prices actually start to fall, like in a recession, but in general, this line pretty much only goes up, and this is what people feel. And prices rose over 22% since 2020. And so a 1 month change of 0.1% deflation is not going to be enough to move the needle. But I did think it was kind of ironic and maybe worth going through some of this stuff to hopefully educate people that don't follow this stuff day to day, week to week, month to month.